The current Bitcoin price is $22,157. So I'm back after a long weekend away and I'm excited to have a look at the charts. Let's get straight into it. It's going to be a relatively quick stream today. And I want to first cover the macro time frame chart, which is the high time frame on the weekly over here. And we have a couple of notable changes that have happened over the last weekly close. And first and foremost, well, let me just remove this vertical line over there. As you guys remember, the vertical line was for that pi cycle bottom indicator which we had, and I mentioned to you guys that look, you want to take out that previous weekly high over there. The last week that we had actually closed even lower than that, and now as you can see, we've broken above that. We've spiked into the 200 weekly moving average, and pretty much prices pulling back off of that level. So a lot of people are wondering, should we be buying the dip? Is this a fake out, or is this a real relief rally that's taking place? Well, I'm going to share all of my thoughts with you shortly, but first and foremost, I just want to mention that on this high time frame chart, if you want to look for levels to focus on, and you're going to notice the confluence of this as we move forward, it's essentially having a look at, for example, this MA over here, or this EMA at least, which is the 200 EMA. This is one area of interest, and you're going to see this number come up a lot. Currently, it's coming in at about $26,800. Pretty much, you can just round it to this level over here, and I'm already going to mark it off. So depending on how long this relief rally lasts, this would be my first and primary target on the high time frame chart, which you can focus on before price will run into some sort of resistance. So let's mark that off right over there, and we can do that live. We're going to write that resistance level. There we go. So you're welcome to mark that off on your own chart. Keep that in mind. Now, this doesn't mean that the bottom is necessarily in, just by the way. And I have mentioned that before. I said to you guys that on a monthly chart is kind of one way that you can mark off the levels that we could form a massive range within over the course of this month. And there's some interesting things. I was in a Spaces the other day, and one thing that they said is that in the month of August, there's actually not too many news-driven events that can affect the market, such as the FOMC and CPI and all of that. And that could provide the perfect opportunity for market participants to regain the confidence, jump back in the market, and have some sort of a relief rally, which could play within that major range, which, as I mentioned to you before, is anywhere between about $20,000 and $30,000. So that's it for the high time frame chart. You can also see, depending on when this happens, you're going to get a cross between the 21 and 200 EMA, and typically price likes to revert back into these zones over there. So something like that, rejection off of there, and then that may lead us later on in the year to reach low levels. But this has been a difficult environment, a hard sort of market to read, and for that reason, I think it's best to just take it day by day and week by week. So talking about that, moving on to the 3-day chart, you can see that the MACD has officially started to cross to the upside, and we're now working on the third official histogram towards the upside, which is providing some sort of relief. And you can see that in the price action. We held the final support, which was the most important support, coming in at $18,950 over there. I'm going to go on to just have a look. Let's check this on the bi-weekly, the MACD at least. So bi-weekly, you can see us starting to slow down with the histograms over there. Weekly chart over here is also starting to slow down. Eventually, we're going to start to get across. I'm sure that's going to be a meme once you have this MACD cross towards the upside. We showed 3-day. Let's have a look at how the daily is doing. So daily is still working at getting back with the moving averages above the histogram over there. So there are some positive signs or things to be excited about. And I know the market is extremely excited, but the main levels to watch are something that you need to keep in the back of your mind. Looking at this chart over here, again, I mentioned that area of confluence. You're going to have this as another resistance level. So it's all coming in between about $26,000 and $30,000 is going to be a difficult level for Bitcoin to start to clear. With that being said, that doesn't mean that there aren't opportunities for long trades. If you have a look at this over here, we have outlined in the daily candle newsletter, which, by the way, the link is in the description below. If you just go down there, you'll see it says the daily candle. Where is it? Where is the daily candle? There you go. Here you go. So sign up to the Daily Candle newsletter. Just click that link. It will take you to that page. It gives you our exact, this is Sheldon and I who write this, our exact entry levels. And this is one particular chart that I'm looking at. I did enter into Atom, but it's not too late. Stay tuned on the show. I'll show you exactly where the next pullback level will be to focus on. So with that being said, I also wanted to touch quickly on the Bitget over here. Bitget, I showed you guys last week that they have strategic trading with a spot grid trading option over here. And I thought, well, let's give it a try live. Why not? So they're saying that the 7-day grid APY gives 396% APY, which I think is enormous. So I figured let's give it a chance. They do have it as well on futures, which of course uses leverage. I'm personally going to attempt first with the spot trading just to give it a bit of a test run. I funded this account with just over $100. So I'm going to pretty much put all of that in. Let's go 100 exactly, and then we can monitor that. Let's have a look there quick. Okay, great. So create an order. Oh man, you need $233. That's the minimum. Okay, I'll deposit some more across there and then we'll work on this tomorrow. But if you do want to attempt that, it's pretty much very simple. They have bots which trade it for you. There is a link as well in the bio below. Click over there in the bio. If you do want to, there's a Bitget referral link, so you lose nothing. And it does help me a little bit. The trading fees get split between us and the exchange. So currently I am looking at also over here, we have Bitcoin with the Heikenaishi candles. And I mentioned to you guys that have a look for the first green candle to print. Now, it's very important that you wait for that candle to close as well. This is more speaking to the long-term investors. Those of you who are looking to go in for massive swing positions or swing trades, we have started to get the etchings of our first green candle. Now you want this candle to close, as remember this works out the average for the potential move that has been happening. We identified last week that the downward move is starting to slow down on those candles, signifying that a relief rally may be coming into play. And I said to you guys, start already preparing your psychology for longs. So because this is all a psychological game. And what I found is on a poll that I did on Twitter, I asked, do you guys think that the bottom is in? And it was something like 80% said absolutely not. We're going much, much lower. And those are the kind of etchings that I look for, or the kind of signals that I'm looking for to identify when maybe the market is starting to get too bearish and there is an opportunity for a relief rally. Now, this is simply just an assumption. I personally believe that if we rallied into the 30K region, the market will go absolutely mental bullish. It will be crazy, crazy bullish. Everyone will say that the bottom is 100% in, and that's when you need to be super, super cautious. So now, while everyone is super fearful to buy the dip, we do have many coins which are creating perfect chart patterns for upswing moves. So you have your series of higher highs and higher lows. You have golden crosses, all the things that I look for to go long. And yes, you have to be careful and control your risk while entering those. But right now is not the time to be scared. If the market is showing you to go long, you do need to go long. So touching on this one as well, which is another Japanese candlestick charting pattern, is the Renko chart. You can see that it is slowly attempting to print its first green candle over there. It hasn't completed yet as well. Like with the Heikenaishi, we're going to have to wait a little bit, but this has been fantastic in catching those long swing trades. Now, for those of you who may be trying to find this on your trading view, if you don't have a premium account, you will not be able to see this. This is only for the top account, whatever that's called, premium account. Okay, I wanted to touch on this as well, which is the yield curve. So we have the 30-year yields, the 30, the 20, or the 30, the 10, and the 2, excuse me. So we identified with the 30 that if the 30 managed to break below this area over here, which is coming in at about 2.9%, then that would be great for risk on assets. So we wicked into that liquidity zone coming in at 3.5%, and price, or at least this percentage, started to come down, but it hasn't confirmed any sort of a reversal yet. We'd want to see a reversal to know that we're on a risk on environment. Looking at the 10-year over here, we have a similar picture. It's pulling back almost exactly the same, but then most notable is the 2-year yield, and this seems to be going straight up. Now, this may be confusing, and you may be wondering, well, what exactly does this mean? In order to answer that, you're welcome to also subscribe to the Crypto Banter daily newsletter. It is on Rand's bio. And essentially, if you have a look over here, it says typically borrowing for a longer amount of time encompasses a higher yield because the lender is taking on more risk. So if a person is borrowing money for 30 years, it will be more expensive than borrowing it for 2 years. Now, that's the way that it should be. If you have a look over here, borrowing money with government bonds over the 2-year yield is at 3.18%. 30 years at 3.19%. Those numbers are almost the same. This number should be low. This number going up means that people are probably not going to be borrowing money, which means that there's an increased chance of a recession. It's a high risk environment, and therefore people will probably not dabble so much into risk on assets, which is one sort of warning sign of why you have to be careful with the current market and what it's doing. It could potentially be a trap, and you have to manage your risk. We're in the kind of environment that creates a liquidity crisis. If people can't get liquidity from loans, then where's the money going to come from? How is the market going to run? So this is something that you need to pay attention to, and it's kind of a canary in the coal mine situation. So I'll be taking all of my longs very, very cautiously and carefully. Moving on, going on to this as well, I wanted to mention that if you have a look over here, Crypto Nick mentioned, what about this? The biggest whale wallet is selling 15,500 BTC at this point, and we know what's happened with all of these funds, like 3AC, for example, which have gone bankrupt. There's been a lot of liquidations across mass crypto funds, which brings me onto this thread over here, and I want to tie that in with what's happening on the Bitcoin dominance. So here Zahir says, there's something really brutal and violent about the ETH-BTC chart moving up 30% in less than a week. Portfolio rotation and narrative adjusting has drawn blood from institutional investors, and now they're sitting at the edge of their seat, wondering if they should push or not. It's comical how perfectly timed these court documents from 3AC are when it comes to investors' attention span. It really seems like the market is trying, let me just go back there. He says, it really seems like the market is trying to distract participants from the actionable matters at hand, like watching crypto move up 40% in a week. The frog skipping in the pot does not realize how quickly the temperature is being raised. If you or your fund has been down 50% plus year to date, which I can tell you there are plenty funds like that, then you've already had the chance to already get yourself out of the hole for this year. So what does that mean? Essentially what he's saying is that retail could be getting fooled. Retail are at risk. Funds that have been heavily knocked could potentially be the ones that are behind this move, and therefore you need to be cautious. So retail investors, what typically happens if you consider the lows that we ran from all the way up to the highs, we've gone up between 40-50%. Look at things like Matic have run about 200%, and retail are only starting to get interested now, whereas many of the funds which have been heavily down will be looking to break even. Going into a recession and stagflationary environment, they'll be attempting to cover all their losses as quick as possible, and I'm pretty sure they would be happy to break even at this point, considering how far down they were. And tying in with those whale wallets, these are things that you need to look out for and be careful of when going long in this type of environment. So He goes on to say that this chart is still so magnificently depressing to look at. The market cap has gone up 35% in 1 week, while stables have only moved down 2%. I can only imagine all the poor souls, 140 billion in on-chain cash. So brings me to my next point, which look how interesting this is. So if we go on to the Bitcoin dominance now, I want to show you the Bitcoin dominance chart that most people are looking at. This is the chart that everyone looks at, okay? What is this telling you? This chart is telling you it's alt season. This chart is telling you we've lost the all-important diagonal trend line. We broke below the mid-range, and now we headed straight down towards the range low. However, the next chart that I'm going to show you is the true Bitcoin dominance. And the true Bitcoin dominance has not lost the diagonal, nor has it lost the mid-range. And what this includes, or at least excludes, is the stable coins. So this doesn't have any of the stable coins in. This is not a true measure. This Bitcoin dominance over here is not a real measure of what the market is doing, because it's being influenced by the whole stable coin market. So tying in with this over here, you can see that a small deployment of stable coins has created a mass rally. And this is something that could also signify that a potential trap is in play, which is why you need to be cautious on managing your risk. And I'm going to show you in a bit the trades that I've taken and exactly how I plan on managing my risks in the next few minutes. So with that being said, I also want to touch on the DEXI, which is one very, very important reason why this rally is taking place, at least in some of the risk on assets. You can see a rejection straight from this 108.6 level, and we are coming down. However, this is probably not enough yet to call a reversal. We need to still see, you can look at the RSI over here is still holding onto this trend line, and I would imagine that it's most likely going to bounce off of this level. Should you see this RSI break this level, so come through, and the moving average start to turn over like that, whilst at the same time you clear this zone over here, you lose that level on the DEXI, which is 104.2. So if the DEXI comes below that, retest in there, we can say, okay, maybe this reversal is real in the crypto market, and we set for a much bigger rally. My next targets will start to become much lower on the DEXI. So that's what I'm watching on the DEXI. I personally, at the moment, just think that this is a pause or setting its next higher low. And there's no problem with that. You can still play the upside, which is exactly what I'm doing with crypto. Nevertheless, but I'm being cautious, right? Okay, looking at the stock market over here. Now, I'm just going to go over a very quick picture. This is the NASDAQ, and it's the most important one that's correlated to crypto. Look, we need to clear above this level, the dash line over there. S&P 500, exactly the same thing. You got the dash line over there. Once we start clearing these levels, then you can talk about getting bullish, and maybe the bottom is in for equities as well. That has not yet happened. So that is it for the traditional markets. Going on to this chart over here, very, very important chart. It's the EMA that, of course, Cheds uses, which is the 34 EMA. Works fantastically well. And this is the bearish outlook, right? The bearish outlook is that we're just forming another bear flag over here, just like this. So we've rejected off of the top there, broke down, and now you have very much exactly the same thing. We've tested it once. We managed to close above the EMA 34, which is a good sign, and now we're attempting to close the next one. But if this plays out like that, you have a measured move which takes you all the way down to about $10,000 to $12,000. Now, there's a lot of bearish things that I'm mentioning over here, but at the end of the day, I like to look at the trend, and the trend on the 4-hour is my ultimate trading chart. The trend is your friend until the end of the trend, and at the moment that is definitely up, which is this chart over here. So having a look at Bitcoin, we have 1, 2, 3 series of higher lows, 1, 2, 3, 4 series of higher highs. You can't dispute it. The trend is up. So all you need to do is manage your risk and not ape into the higher highs, but rather wait for the next higher low. So it requires a little bit of patience. I anticipate that, yes, we could rally hard pretty much over the course of today, maybe even tomorrow. And then I would expect that sometime around Wednesday, late Wednesday, early Thursday, there could be some sort of a pullback. Now, I'm not an expert when it comes to timing, but I know that there has to be another higher low that will eventually set. So with Bitcoin, it's coming up right against that diagonal trend over here. We all know that $23,000 is an important level to clear. I can easily see this move running all the way up to about $25,000, and then that's where the resistance comes in. So as mentioned on those high time frames, anywhere between about $25,000 and $28,000 is where the major resistance comes in. So be patient, stagger your orders. Don't have FOMO, but some of the charts are looking quite decent. So we know Ethereum has been one of the leading charts over here. I personally would be cautious to buy big spot positions into this because obviously it has run quite a lot already. Secondly, you are starting to get the golden cross, which for me personally is something that I look at for my long-term trades. Now, what I've typically found in the past is that anytime that these crosses take place, and this cross, the main ones that I look at is the 50 and 200 EMA on the 4-hour chart. What I found is that price tends to pull back into that like a magnet. When these crosses take place, oftentimes price runs way ahead. Everybody panics and buys in, and then it just pulls straight back in there and they get super bearish. But that's actually where you would go long, is straight into that cross. And what happens is you also have your key your key horizontal, which is way more important. Horizontals are the most important lines, in my opinion, when it comes to trading. And look at that cross is coming right into that horizontal level. So with Ethereum, you could potentially recapture another long in the region of about, I want to say about $1,300 would be the main level that I'm looking at. Okay, going on to Atom. This is a chart that I covered today in the newsletter, and this is what I'm seeing on Atom. So Atom, I did point out to you guys before on one of the previous daily candles. I gave 2 scenarios. I said watch for one of them. So the long scenario has played out. Same thing. You got 1, 2, 3 higher lows. You have the golden cross, which has taken place right over there. You have 3 higher highs. So a lot of people are thinking maybe it's too late to go long. It's not yet, guys. Just be patient. Your load up zone is coming in anywhere between about $8.60 and $8.94. If price manages to pull back into this zone over here, holding above these levels, then this would be a great area to load up. It will be your next higher low, and off you go. Bear in mind that this level is obviously quite far from the invalidation. Your invalidation is going to be outside of the diagonal trend line, so manage your risk. Don't enter all your orders in one go. I would just stagger them bit by bit. And by the way, also on Bitget, they do offer an option whereby you can stagger your orders in. If you have a look at, here you go, same thing, spot grid trading. Click on that. And then you go to manual creation. This one shouldn't have a limit. You'll be able to enter whatever you want over there. It just seems like the automatic one that has a limit. You can type in your number of grids. I see they go up to 90 grids. So for example, say you wanted to enter 25, you put in your low price, you put in your high price, and it will stagger your orders in for you. So that's the best way to do that. Moving on to RUNE. Here you go. Let's have a look at the RUNE chart. So RUNE, I caught a RUNE long. I wasn't able to go live before doing it, so I apologize for that, but I am in a long on RUNE. I longed it in this yellow box area, which you will most likely get a chance to re-enter in at a later stage. Similar picture. I'm looking for the ones that have only recently just started to get their cross, because then I know that it's not too late. You have your ascending triangle. These have a measured move, which would take you all the way up to $3.49. So from pretty much, if you manage to get in on this area, this is a big move. It's about 37 to 40%. I also have a trade on Matic. Matic is over here. Now, Matic is quite the opposite. I'm looking to short Matic. So I posted this on my Twitter, and I mentioned that I was shorting, I put all my staggered orders. Pretty much they staggered from 99 cents to the top over here. But the reason for that was because I was expecting that level to get hit last night. As you can see, it went to 98.9 cents. So I narrowly missed that entry. I'm going to be adjusting this slightly because I think the next best area is going to be anywhere within this zone over here. And this I'm looking to short. And I know a lot of you may be wondering why. Well, very, very simple. One of the reasons why is it's run tremendously with hardly any sort of a pullback. Let's have a look at that. So it's run all the way 190%, no pullbacks. If it runs into this zone, it would be 250% with no pullbacks. And for those of you wondering, you can check, I think Miles is doing a show later on this evening, and it's all about Matic. There's been big partnerships with Matic, and pretty much it's a news-driven event. For me personally, it's going to be a sell the news event because it is coming into a key area of resistance, and I'll go on the daily chart to show you what that looks like. So this is what I'm seeing on Matic. It's coming into a key area of resistance. Look at that. All these wicks that have come through over here. When it was bullish, this was a very important area for it to hold. And I would expect it's going to be exactly the same thing. So all these wicks is a bunch of liquidity that I'm looking to capture, and I'm using that laddering order system. I'm going to just stagger in my positions over this entire period. So all you need to do is you take your zone, you put in the low, you put in the high, and then you set however many orders you want. Something like this, I'll probably go with about 20 different orders. I'm working on cross margin on this particular trade. Usually I'd use isolated, but on this one, I'm going cross margin. And guys, pretty much that is it. That brings me towards the end. I am watching as well low time frame charts. I have been taking some trades today, but I was hoping I could do this one live, but it doesn't look like it's going to be ready yet. So stay tuned, and I will post on my Twitter what is next. Please make sure that you have a look in the link in the description below. My Twitter account is there. Follow me on Twitter if you want to stay up to date with my latest trades. Also, give the video a like if you don't mind, if you did enjoy the short content. And then make sure that you sign up to all the newsletters as well as the Bitget referral link over there and the ByBit too if you do wish to support me. And that's it from me, guys. I will see you all on the next show. Have a fantastic day. Thank you all for watching. I appreciate each and every one of you, and cheers for now.